Hello and welcome to my YouTube channel. I'm Mitch. I'm the founder and CEO of Strong Wealth, and we help business owners and salespeople optimize their finances. All right, today I'm going to be walking you through a case study of how we saved our client $54,241 in taxes. All right, I originally was just going to share this with prospects who booked a call so they can understand, how we've helped clients in the past, how we work with clients, ways that we can help them, and talk a little bit about our tax planning service. But you know what? I figured that this could also save you $54,000 on your taxes. So I wanted to record this, share it publicly so that it's out there and you can understand what tax strategy we leveraged and how we did it. Everything you need to know to where you could implement this on your own and save this amount of money for yourself. All right, so watch all the way through so you get all the context and you are able to actually share this with your financial professional, or if you don't have anyone looking out for you, helping you do this, maybe you can reach out to me. Anyways, all right, let's go ahead and jump right in. How we saved our client $54,241 on their taxes. Okay, so here's what we're going to go over. Client situation, so you can get some context, tax strategy context, so that you can understand it and be able to, have a conversation with your CPA about this, what we did, how it helped, and our tax planning service. All right, let's go ahead. All right, client situation here. So our client had ownership in 3 businesses through a holding company taxed as an S Corp. Okay, so he had a holding company and he had 3 businesses that were owned by this holding company. Okay, so you have kind of 3 layers. You have the bottom 3 companies that are cash flowing businesses, and then you have the holding company, and then you have the client's personal financial situation. So as you can understand, difficulty before working with us, he had a lot of difficulty planning for taxes due to all of these pass-through entities, and each of them had multiple business partners with different ownership percentages. So he was really operating in the dark prior to working with us. He was basically hoping that his tax bill wouldn't be more than the cash that had made it from the businesses to his personal life. And even when he did have enough cash on hand, he was feeling like all of his free cash flow that made it to his personal finances ended up stolen by the IRS, and he wasn't able to really build wealth or make progress despite his businesses being very profitable. He's a single taxpayer making $500,000 in active business income, and he has an existing CPA relationship prior to working with us, which is important to mention, but I'll get to later why this is important, because a lot of people, they reach out to us and we are financial planners. We are not CPAs. We don't file taxes. And they're like, I was hoping you could file my taxes. And it's like, no, we can't help you file your taxes, but we do tax strategy and tax planning, which I will cover what that even means with this example in this video. Anyways, all right, so the deduction that we took advantage of was the qualified business income deduction. So I'm going to just walk through this kind of workflow here, decision tree, so that you can understand how the deduction works. And then I will also give you more context on the next slide, so that you know everything that you need to know to save some money in your business. All right, married, filing joint, single, head of household. I'll go down the married, filing joint decision tree process here, but you can follow the single or head of household if that is your tax filing status. The numbers are just different, but everything else remains the same. So if you're married, filing joint, and your taxable income is greater than $364,000, then you continue down. If not, you get a 20% deduction on your qualified business income, which I won't go into what qualified business income is. That's a little bit more than what we need to cover in this video. All right, but if it is greater than 364, you go down here. Is it greater than 464? If not, you get a phase-in deduction, which means partial. If it is greater, then you ask yourself this question: do you have a specified service, trade, or business? All right, and this is where our client's previous CPA caused him to pay so much more in taxes than he needed to. So anyways, you're probably like, what does that even mean? I'll go over that in the next slide here. But if you don't have a specified service, trade, or business, then you continue to qualify for the qualified business income, qualified, qualified business income deduction, and it is limited to the lesser of 20% of business profits or 50% of W-2 wages paid. So as you can probably already see, there's a lot of optimizing potential there because of, it being limited by these two different numbers in your business. Again, that's for another video. And if you ever hear someone say optimizing QBI, this is what they're talking about. I will share that in another video of exactly how you can do that in your business. But for this one, we're going to talk about this question here. Do you have a specified service trade or business? Because if you do, you get no deduction, which was costing our client a lot of money. All right, let's go ahead. Next slide. Move this out of the way so you can see all of the information. All right, so what classifies as a specified service, trade, or business? SSTB for short is any trade or business providing services in the fields of health, law, accounting, actuarial science, performing arts, consulting, athletics, financial services, and brokerage services. Most CPAs stop there. If they think your business falls under one of these categories, they lump you in. You no longer qualify for the QBI deduction if your income is above the thresholds I mentioned earlier, which could be costing you a lot of money if they are wrong. Okay, so for me, I'm a financial planner. I clearly fall under financial services. Nothing I can really do. But your business may fall into a gray area. Maybe it's not quite one of these. Maybe it's just legitimately not one of these at all, which is great. But if it is in the gray area, like our client's business was, we need to continue on. We need to go past where most CPAs go, and we need to read on. And here's exactly what the IRS says. I mean, this is straight from them. Okay, so any trade or business where the principal asset is the reputation or skill of one or more of its employees or owners, and that it is demonstrated by. Okay, so if your CPA makes it past these high-level categories, and they're like, oh, let's read further, and they read this, they stop at this comma, they act like it's a period. Okay, but this is not a period, it's a comma, as demonstrated by. So we need to read on to understand what they mean by what they're saying. Okay, so receiving fees, compensation, or other income for endorsing products or services. Licensing or receiving fees, compensation, or other income for the use of taxpayers' image, likeness, name, signature, voice. I won't read the rest. Receiving fees, compensation for appearing at an event, radio, television, or another media format. Okay, so if it's like, okay, gray area, I'm not sure if we fall under one of those categories. I read this, it's like, maybe. But when we read these bullet points, the clarifying information from the IRS, it's like, okay, no, we don't. That is not what we do. That's not. We don't make money from that. Essentially, that is clearly easy to say. Okay, so our client, let me just go ahead and jump to the next slide. You can understand what an SSTB is now by reading this. So if you're like, okay, I don't think we qualify. Or we're not classified as an SSTB, then you should be qualifying for the QBI deduction. Okay? If you're not, then you need to reach out to your CPA. So, let me move this down. So what we did, we noticed on his previous tax return that his CPA classified his businesses as SSTB. Okay? So they said that he did fall under those classifications. But according to the IRS guidelines, his businesses should not have been classified as SSTB. So we caught the previous mistake and convinced his current new CPA, of course, of what the correct classification should be. Now, it is also important to mention that his new CPA, we had to convince them. And why we had to do that was because they were just going to go with what the previous CPA had said. They were just going to say, okay, we'll trust their work and we'll continue to operate as if that's the case without getting to know our client's business. Okay, but being his financial advisor, we knew his business well, and we were able to say, no, based on what we know about the IRS guidelines and his business, he should qualify for the QBI deduction. He should not be an SSTB. Okay, so you need someone in your corner who understands your business and is willing to advocate for you, even maybe against your CPA, to help you save on taxes. This is legal. This is not like we're trying to commit tax fraud out here. We're just using what the IRS says, and we're operating according to those guidelines. And the CPA did agree with us after we gave them the additional clarifying information. So clear, we're not doing anything illegal or just arguing with your CPA for no reason. We're advocating for you because you should be saving this money and not giving it to the IRS. Okay? Anyways, all right, let me move this back out of the way. So how it helped our client, he got a $160,000 deduction. Can you believe that? $54,000 in current year tax savings, not deferment. A lot of tax strategies are just deferring, pushing taxes off into the future, which can be good, but this is true tax savings. He will never owe this taxes ever in his life. Okay? And we secured him future tax savings as well of over $110,000. Why? Because this QBI deduction is set to be around the next 2 years at least. It may continue on past that. I think it should, but at least for the next 2 years, we're going to save him this money as well as during this current year. Okay, so he's saving so much. As you can see here, he'll save probably almost $200,000 on taxes over this next few years if his business continues to scale up, which now he can just focus on that and know he's being taken care of on the back end. So anyways, that's how we helped. Saved him $54,000. Let me show you the proof through our tax planning reports. So this is, let me move that down. Okay, skipping around a little. There we go. We're back. All right, so this is a couple examples of tax reports that we share with our clients when we do tax planning for them. Okay, so this one is a tax report here where it's kind of just an overview of your tax situation for a given time period, given year. So in this case here, we have total income 521, taxable income 422, total tax here, filing status, marginal rate, average rate, safe harbor amounts to avoid penalties, qualified and dividends and capital gains taxes. Marginal tax bracket information, so where you fall in the marginal tax brackets, where your capital gains tax rates are. And then we also have a bunch of deductions and credits here that we're evaluating whether or not you qualify for them based on the income limits. Okay, so our software helps, it analyzes your tax returns, analyzes your income, and based on what we input, it can also see, do you qualify for any other deductions or credits that you should be qualifying for? All right, so we're covering all of our bases here. So anyways, that is kind of an overview. This is what we use to analyze different scenarios of our client's tax situation. So you can see scenario 1, 2, 3, 4 here, and this is where I'm going to give you proof that we saved our client this money, and this is not all made up. All right, so anyways, we have tax year 2023, 2022. We're saving him the taxes all in this year. His 2022 taxes needed to be amended because that previous CPA made the mistake. So we're going to amend it, change it, fix it, and save him the money. But it all comes to him this year. So anyways, as we can see here down at the bottom, we've got total tax $149,000 versus $119,000. That's about $30,000 difference. Then we have $130,000 versus $105,000, which is about $25,000 difference, which adds up to $55,000. And I'm just rounding. Technically, it is $54,241, an accurate amount of his tax savings. But these are the scenarios that we share with our client. We can do it in this situation where we're analyzing tax savings opportunities. Or we can just say, okay, based on how business is going, let's say we're halfway through the year, we can say, if you do 20% better than what you're doing now, if business grows 20%, that is, here's what we expect. If it stays the same and continues to operate on the same trajectory, here's what we expect you to owe in taxes, and any other scenario we want to look at. So we can make sure our clients are well prepared ahead. They know exactly what they're going to owe. They know that they are taking advantage of every tax saving strategy possible, and we help them plan ahead how they manage their cash flow to have this money set aside to where it doesn't wreck their business, doesn't wreck their personal finances or goals, and they can go ahead and give the necessary amount to the IRS and move on with their life and not feel broke after. So that is the example of our tax planning service. This slide here is just because I use this when I send this out to prospects whenever they schedule calls, and I wanted to share this on YouTube because I figured, you know what, if you don't schedule a call with me, I'll give you the information free anyways, so that you can possibly save $50,000+ on your taxes as well. So anyways, if you want to reach out, you could be the next case study as well. When you schedule a call, you'll probably receive this presentation with me going through the same information, but with different clothes on. So anyways, thanks for watching all the way through. I really appreciate it. If you have any questions, feel free to ask in the description or in the comments below. Like, subscribe, all these fun things. And if you're interested in working with us, feel free to schedule a call through our website, strongwealth.net. I'll put that down below as well. See you next time.